Hey traders, Raghee here. I need some intro music for our Sunday show. That one just sounds so serious. But we will find something. Great to be here. Thanks so much for your wanting to get a jump start on the week. This is when I do it. Sunday evenings, getting ready for the week to come. A couple things that make a lot of sense to do, and we put this in the section of this week in the markets as well, and that's just going through the economic events that are coming. And there's three places that I'll look on Sunday evening for these, and it's going to usually start at Forex Factory, which is the website that's up on the screen right now. And I'll look at the whole week, right? So when I look at Monday, we have ECB Lagarde very early in the morning, Empire State Manufacturing Index. Not a biggie, but since it's the only major economic event, major hot zone, right? Red hot zone tomorrow, probably will have a little bit more impact than had it been one of many. So that's one to look out for tomorrow. Moving into core retail sales on Tuesday, then going into Wednesday. And again, when you think about a lack of a lot of hot zones on a particular day, building permits, housing starts are probably going to have a disproportionate impact on the day because, again, not a lot of other data releases. Going into Thursday, of course, our weekly unemployment claims, existing home sales. So make it a habit to do this. Now, the one part of this that's a little bit different, and it depends on the time of year, but that is Estimize. I like Estimize a lot, right? And it is a free service. I don't know if I spelled it right. Estimize. There we go. So once you log in here, what you're able to do is get what I think to be is a unique earnings calendar. Most earnings calendars are just going to let you know what's coming up this week, which to me is not all that helpful. What I want to know is I want to track the stocks I want to track. I want to put a list together of those stocks that I want to be aware of. And I want to be aware of those 6 to 4 weeks before earnings, no less than 2. So when we have services that are helpful, I mean, I guess it's better than nothing, but we have services that let you know this is what's coming up this week, or this is what's coming up tomorrow. That's a little bit different than being a trader who plays rallies into earnings or plays a trend in that 4 to 6 week window. By the way, if you want to know how I do this, Friday, I did a video at the Simpler Trading YouTube channel. And if you go check that out, it's the free video. And what did I call it? Where to buy the dip. I called it, we talked about buy the dip last week. And in that video, I got into, here we go, where to buy the dip. And this is Estimize. You can see it right here. And I talk about how I'll keep an eye on something plenty in advance, and we can follow particular stocks. So if you've never checked that out, do so, estimize.com. Again, I don't know the folks there. I don't know if it's been sold to, but it's a great service. And I pay for it like anybody else. There is a premium version. There's a free version. Check out the free version. It's ideal for earnings season. And that's one of the calendars we have to be aware of this time of year. All right. So those are things that I'll do on a Sunday. So let's get into our questions. I've got some really nasty weather rolling through today. So we'll probably keep the show a little bit on the shorter side. Like I said, it's a really nasty squall coming through. So, hey, Nick. Yeah, I'm having a great, yes, it's a relaxing weekend, kind of chilling, not as I like to say, get away from the charts for a little bit, get away from the screens for a little bit, and, come back on a Sunday and get ready for the fresh week. So it has been, I've been eye-guzzling Ted Lasso, catching up on season 3. It's been really, really good. All right. So what are the best online sources of news to keep track of the narrative for the Euro US? Nick, I would say I like, for any Forex, I would say Forex Live. That's they live blog the day. It's not about trading ideas per se, although I do throw them in there. I would say Forex Live would be where I go to quite a bit for not specific euro yen, but or euro US, but just for forex generally, right? I don't know that there's any website that's just dedicated to the euro US, but forex live.com. All right. All right. Good evening. Good evening. Yes, great to see everyone. All right. Next up, happy Sunday. Hey there, Off-Road Bear, AMD. Off-Road Bear, I'll tell you what, I think there are certain symbols like the Russell, like AMD, that tend to do their own thing. I don't usually like this symbol, although from time to time it will set up with really good, clean setups. And I do think last week was such a week where AMD did set up pretty nicely. And generally, if I'm looking at the SMH, I try to find almost anything other than AMD personally. Now, I will say the Lorna Bot, if I look at 10 trades the Lorna Bot takes on AMD, and you all know she works with me in the Sector Secrets Mastery, if she's going to take 10, I think she's going to be a winner 7 out of 10 of those. But generally speaking, I like to avoid AMD. I'd rather trade NVIDIA. I'd rather trade SMH. So if NVIDIA is just one of those symbols that I am not really great at. You know, my win rate is maybe a coin flip. It's 50, 55, 60% on a symbol like that. And I don't know why it tends to do its own thing. But for those of you that trade AMD, you know it does. It can do things very separately than Intel and SMH and NVIDIA and TSM. And so for that reason, I would say there very well might be a daily swing there. But knowing my track record with AMD, I'm going to usually pass. And when I look at the structure of NVIDIA, I'd rather be looking at NVIDIA. When I look at the structure of some of these other names, I'd rather be looking at some of these other names, to be quite frank with you. But Off-Road Bear, I will keep an eye on SMH, which I like a lot. All right. So, and I appreciate that. And you know what, Off-Road Bear, I think, sitting on this side of the mic and of course the camera, I think it's really important for us to be really straight up and say, look, there are certain symbols we're really good at. And there's certain symbols that can really, sometimes you're the windshield, sometimes you're the bug. Right now, gold has been very challenging to me. Bonds have been challenging to me. AMD has been a little challenging. Sometimes it's because it's choppy versus trending, and sometimes it's simply because it's one of those symbols that's capable of doing its own thing. One of the things also that I like to see habitually in the symbols that I trade is that they are tracking index sector stock. They tend to move with that positive correlation or sympathetically. And when I'm day trading in the morning with our Sector Secrets folks, and you can learn a lot more about that over at sectorsecrets.com, or hey, set aside a 5 and 2 1, set aside $7. I get asked about trials a lot. And I'm going to be honest with you. I don't like doing them. I like to see folks committed to about 3 months of learning what I do so I can just brain dump and share everything I can in about a 90-day period. Because let's face it, if we're learning a brand new skill or a brand new way of doing something we already know to do, like trading, it takes time. And I find about 90 days, I can really impart a lot of knowledge. So I'll be frank, I usually don't like trials. However, it's summertime and it's time for summer school. So for those of you that want to check out what we're doing in the Sector Secrets Mastery, I have a trial coming up. I think it's the end of this month. So we'll be going through that trial in August. Trade alerts, sessions, all the sessions that we have. So I do appreciate, I definitely appreciate your kind words, right? And so for those of you that want to check it out, like I said, $7. And no, it's not going to be something that's going to be available again in September and October. I do a trial about once a month, once a year, maybe twice. So that's why I'm saying this. When people come back to me and say, Rog, you're going to do a trial? The answer is usually no, right? Usually we'll have some sort of complimentary access to the service with a class, because I think it's really important to wrap up any service with the ability to have a little bit more time and teach you everything I know. Anyway, I really appreciate that, Off-Road Bear. So AMD, sure, but SMH would probably be on my list a little bit more. JJ, all right, Exxon, I'll tell you what. Exxon was a trade that, well, the bot put this trade on. She did a great, and anything that we do in the mastery, Lorna Bot and I are doing with a specific approach, with a specific sequence, and it's definitely rooted in the things that I teach. So last week she had a great buy, I think off the low that we might have put in either Thursday or Friday, hit our target, scaled out at break even, and we're done. What about now, right? What about now? I need a new setup. JJ, if we're going to trade Exxon, I need a new setup. But let's kind of treat this the way I was talking about Off-Road Bears AMD question. Is there anything else in the XLE that looks interesting? You know, it may not be Chevron and Exxon. It might be something like, Marathon. It might be something like Phillips 66. It could be, there could be other names that have better clarity, or it might be none at all, right? And one thing that is catching my eye, and I'm going to show you all right now. Here we go. So this is the year, right? And you'll see this kind of orangish color, which might be kind of tough to see. Let's make this a different color. Let's make this, I don't know, pink. That pink kind of pops. Kind of like the pink. Let's make that a pink. Pink is not usually my color, but that might be a good one for this. Anyway, that is the point of control. That's the level this year that we have seen the most volume at, 81.35. That's a level that I will be looking at for a minor low or for an inside candle tomorrow. So JJ, if that happens on the XLE, it will help Exxon. It will help Chevron, but I may just go with the tide of the energy sector over an individual stock. So I would say Exxon gets my attention. XLE is probably going to get my my trade though, right? One stock might open up an idea to us while another stock or another market could be the one that has better structure. Now, I think that's the way Exxon and XLE are going to work best. So thanks for the question. Good stuff. And, that leads us over to crude oil. And when I look at crude is still struggling. As you can see back in here in April, most recently here in July, we're having a hard time getting above that 200 propulsion. And as long as that is in the way, it will be tougher for energy stocks to continue higher. So I'd also consider that, JJ, I'd consider that as well, right? The struggles that crude oil have and how that impacts what's going on in the energy sector, generally speaking. All right, MX. Good evening. Catching you live today. That's awesome. With the dollar down, is there any opportunity? I'm looking for bonds or sector ETFs. So I don't know that I would connect the dots from the dollar to those corners of the market, right? So I would kind of think about the question that Nick asked earlier about the euro. So if I'm looking at the dollar, I'm thinking about, the euro. I'm definitely thinking about something along those lines, because the dollar and the euro have an inverse or negative correlation. So dollar weakness, though, let's step back for a moment. What does dollar weakness actually tell us? In this environment, it's telling us two things. One, that the U.S. Central Bank, the Federal Reserve, is on the tail end of the FOMC, which is the people who are voting within the Federal Reserve, right? You have the voting members of Federal Open Market Committee, and then you have just a group of the Federal Reserve. So anyway, when they're done almost hiking, which is probably going to be the case, this last hike has been discounted. It's widely anticipated. It's priced in, this July 26 hike. But you know who's going to keep hiking? The European Central Bank. So the European Central Bank keeps hiking. That's going to push the euro higher while it pushes the dollar lower. That's the correlation, the inverse correlation, which is up in the 90s, by the way. So so that's what's going to affect the dollar and the euro, right? But then if I want to take it one step further, now I look at the bonds. Now let's not look at the bonds through the dollar. Let's look at the bonds through why the dollar's moving lower. So if the European Central Bank is going to continue to hike and the US Central Bank's about done, what could that do to rates? Well, if we're going into a pause and maybe cut, bonds should be moving higher, whether that's ZN or ZB or ZT. We should start to see lower yields. And we're coming off a bottom in the last about 7, 8 sessions. So if we can continue to see that move higher, that's lower yields, right? ZB moving higher, TLT moving higher, that's lower yields. And that's not necessarily because of the dollar, but it's because of the US Central Bank almost done hiking and then moving into a pause, then finally going to a pivot, which should help yields. Actually, which should just help symbols like the bond market move higher as yields drop, right? So that's the way that I'll look at it. And I don't know that I love the way yields are moving. Remember I said earlier, there's certain markets that are going to be tricky. And I think yields right now are tricky. I think gold right now, for the same reason, is tricky. Right now, dollar, though, to your point, is probably one of the easier symbols to trade. All right. Next up is GNRC. I like Generac to the upside. It's made it above the 200 propulsion. It's in an uptrend. This is one of the trades that I like to put on long as we go into hurricane season here in Florida. And I'll usually do that the end of April, beginning of May, that time. So it's sort of this seasonal thing to be long, things like Generac, things like NEE, Nextera. Nextera is not really giving us that great setup, but Generac, in its own right, apart from hurricane season, is moving higher. So yeah, by the pullback, yes, absolutely, Mark. We can do that. We can do that. All right, Chris asks about Honeywell on the daily. Uptrend above the 200. We absolutely want to play a pullback buy. Will it be a mean reversion to the wave? That I don't know. Yeah, that I don't know. Will it be a mean reversion? I'd be open to that. Might it be some sort of Darvis level we can take advantage of? Again, that would be fine too, but I would look long on Honeywell and after a pullback, not at new highs, after a pullback. All right, NTR for a weekly swing. All right, so if I'm looking at NTR, no, I will not play NTR. If there's anything I can do on the weekly, it would be down. It would be to the short side. It's below the 200. It's in a downtrend on the weekly time frame. So if you're looking for long puts, I would say yes. But if you're looking for long calls or you're looking just to simply get long this symbol, right? I get the right one, NTR. It would be short only. Yeah, because of the structure on the weekly. Right. All right, cool. Let's take a quick peek at the way in which we're opening this morning. Let's start off with this morning in the Asian session, right? So if you take a peek, we've got this candle up here. Look, that candle does seem to be concerning to a lot of folks. Let's make this a little bit bigger. There we go. So this is the candle that I'm talking about, the Friday candle. So we made a higher high and we closed near the bottom of the range. Is that in and of itself a harbinger to weakness? It often can be. I wouldn't say it's the beginning of some dramatic turn to the downside. What we typically expect is, if we pull back like this, we might have a day where markets move lower. But overall, I want to be a buyer, gang. I want to be a buyer, right? So here's a candle that looks a little bit similar, right? Made a high, pull back, and then we started seeing higher highs after that. So please don't think just because this candle pulled back, it's all is lost and we're going to start to tumble from here. No, we'll probably pull back, make a mean reversion or a daily price movement range. I think it's going to be far more important that we stay below the previous session's line in the sand, which is the close of the cash close, a 4 p.m. close, and it might even be important that we break down below Friday's low. So that would be the completion of a minor high pattern if we trade down through, say, 15,660. So, there are levels and degrees to which we could look for weakness. Don't let a candle pattern be the sole reason. But yeah, usually when we see, a minor high, that's going to be a harbinger to some weakness. We can see that playing out on the S&P. But again, two things I'm looking at. The previous session close, which was 45.36. Well, the 4 p.m. close, right? I usually will take the 4 p.m. close from my toss charts, but whatever the cash close was on Friday, and then the low. So breaking below 45.30 would be pretty bearish. And if we continue to follow through there, I think it will be far more important that we start to see that after 7 a.m. Eastern tomorrow, not necessarily at 6:20 during the Asian session. But, it's a little bit weaker. We're seeing a little bit of that follow through from Friday's weakness. But let's see where we are at 7 o'clock. I mean, that's going to be 13 hours almost from now. And that's going to get us through the Asian session, the European Open, the UK Open, and into the New York session, which kind of early starts 7 a.m. Let's see what the opinion is as the US markets get going. All right. So that is what's going on in the broader averages. And next up is any thoughts on XLF or AI? And we're going to wrap it up there after that, gang. Let's see. XLF, I like the long side of XLF. I do like that, Robert. One thing we have seen as we've come out of let's see here. One that we've seen as we've come out of the Q2 into Q3 is XLF. Unlike XLV, financials have seen a lot more strength. So whether it's JP Morgan or a relative outperforming stock within it, yeah, I would be a fan of starting to get long XLF. And then remember, XLF is going to contribute to a little bit more strength in the S&P and possibly even the Dow, where XLF is the number one weighted sector. So great question on that. As far as AI goes, and I'm not saying I'm not interested in some of these names, but this is kind of a meme stock right now, gang. I know this is a hot topic. It's a hot corner of the market, but my concern is that the volatility that we're seeing here is going to make it a little riskier to trade. And then also, if I want to play the options on a particular stock, on a particular ETF, I want to look at the liquidity in the options chain. And if I can't find a strike that I want to trade, whether it be the 36 strike or the 31 strike or the 32 strike or whatever, if I can't find a strike with at least about 500 open interest, preferably 1,000, it's too thin. It's too thin for me, and I'll usually pass. Now, do I want to be generally long AI? Sure. As far as the stock goes, I would prefer to be long AI. But as far as XLF goes, here's the difference. AI does not have to do the same thing as the NASDAQ, S&P, and the Dow, or even the Russell, right? It doesn't have to move with those broader averages. XLF will likely and should. So if I can get that cohesion, right, where the broader averages, the indices, and the sectors heavily weighted within them, because if anything that the NASDAQ rebalance reminded us of is that we trade in high concentration weighted markets, high concentration weighted at the sector level, high concentration weighted at the stock level. That's why looking at things that are not also high concentration weighted. Look, market internals, not high concentration weighted, right? Think of your typical popular indicators, ticks and trends and advanced decline. They're not high concentration weighted. They're not moving based upon how the S&P, the NASDAQ, the Dow are actually composed. It's a very strange reality where we're willing to look at an indicator that's really not indicating the reality of the index. So I don't use them. Another thing I don't really look at is equal balanced indices. Doesn't matter. We don't live in an equal balance index world. So I'll further even say market breadth doesn't matter, right? Because unless we're trading these equally balanced indices, which we don't, and unless we're talking about a more equal distribution of stocks within the averages, which we don't have, who cares about market breadth? We are still trading in a world where a very small number of stocks, probably less than 50, quite frankly, right, have a disproportionate impact on where everything goes, right? And that's why I like to trade names and sectors that are attached because of that. And yeah, I sound like a heretic, right? I don't know if y'all can hear the thunder going on back here. It's bonkers down in South Florida right now. But yeah, that's why I might sound like a heretic when you really think about it, right? When you really think about it, it makes little to no sense, right? Because we need to trade the markets, accept them for what they are. And remember, NASDAQ pulled back. Why? Because we thought, oh, we're going to see an unwinding of the high concentration weighted of the Magnificent Seven. No, all we saw was a reduction in an absolutely disproportionate, 55% weighting in the NASDAQ 100 to about 40. And everyone said, oh, it's still high concentration weighted. All right. Yeah, I don't know if y'all can hear that. I'm gonna cut the show here, but I think that's the last question. Yeah, any of you who have dogs and cats, I don't know, you can't see her, but the dog is right, literally under me, under the desk. So she's here for our show. Gang, thank you as always for being here on a Sunday. I respect so much your dedication to being great at this game called trading. Look, is it work? It is, right? Please don't think this is the game of turning a small amount of money into some gargantuan amount of money, or that this is the kind of job where we place a trade and go have a picnic, right? There's those folks out there, but the truth of the matter is this is hard work, and I respect the hard work that you put in. Why do we put in the hard work as traders? Because we can be disproportionately rewarded if we get good at this game. I don't know that anyone doesn't think a major league ball player or a hockey player or a football player doesn't train 12 months out of the year. They train their faces off, right? They train really hard. Why? Because they can get disproportionately rewarded for the skills that they have. That's the game we play, right? Not the game of I'm going to turn $500 into $1 million, or I'm going to go to the beach and have a picnic, right? That's just not the reality. So thank you so much. It warms my heart. And I know traders out there are saying, you know what? I can be great at this if I put the effort in. So you're my kind of people. Gang, be good to each other. I'll see you tomorrow for Charts and Coffee. Until then.